Yesterday, we saw U.S. natural gas surge to a 13-year high on the back of tight supplies. But are these prices sustainable? Chris Louney joins us now. He is VP of Global Commodity Strategy at RBC. Chris, thank you very much for coming on the show. And I'm sorry, I forgot, is that how you say your name, or is it Louney?
It's a Louney, unfortunately.
Louney.
Yeah.
Sorry about that, mate. You are in the camp that thinks that natural gas is going to have trouble staying at these levels.
Yeah, for sure. I mean, you mentioned it at the top. Gas has been on quite the impressive rally year to date. And we understand why there are tight fundamentals, particularly for this point in the season. But we do think we have certainly gotten ahead of ourselves at these price levels.
Where do you see natural gas stabilizing over the next year? Do you have any kind of a number?
Yeah, so how we've been talking about it is because we do think gas is overextended. We do think gas is at unsustainable levels. What's gotten us here so far is pretty cold weather in the Midwest and Northeast, which are key heating demand region, strong export demand, strong demand sort of across the board, coupled with a production profile that has not really kept up. This has certainly seen gas rally, but this has all been taking place against a very tight global backdrop, a gas market that's being dominated by geopolitics. Mm-hmm. And so what we highlighted is that has certainly built past all of our expectations if you were to ask us a few months ago. For example, our high scenario for Q2 is 488, and for 2022 is 447 on average. And given where prices are trading today, they are off a bit. But that just shows how unsustainable we do think these price levels are, and that for the rest of this year, we do think at some point gas should return back towards more reasonable levels as we expected.
Okay, so we got gas at almost $7 today. It is down. Sorry, what was that price for the balance of 2022, Chris?
Our 2022 high scenario was 447. And I think that paints a picture of just how overextended we think gas markets are right now.
Yes. Now, I suppose people are worried, though. Storage is pretty tight, isn't it? And customers, they got to have natural gas. You can't heat your home without it.
Yeah, so storage is certainly, finishing the season around 3.4 TCF, certainly on the low end, but by no means out of the historical realm of what we've seen over recent years. But this is a tighter balance. I think when we think about gas markets right now and we look how U.S. balances are pricing, we are clearly in a different environment. As I mentioned, exports are an important part of the picture. Geopolitics are now a part of gas markets in a way that they really weren't before. If we were to rewind, prior to 2016, when U.S. LNG exports started, what happened to a molecule in North America did not affect what happened to a molecule in Europe, and vice versa. Mm-hmm. So now the conversation is much broader, and we're seeing the market learn how to price those things in. Whether or not it's being priced in appropriately is a separate question, but what is clear to us is the market, in the natural gas market in the U.S. specifically, is certainly in a new type of balance. And while prices are pricing on the back of geopolitics, on the back of these risks, on the back of these global balances, U.S. balances are also tight, and tighter than they would be at this point in the season normally. And so we understand, I think the market understands why gas prices have rallied so much, but I also think it's important to keep in mind that this, again, is pretty overdone in our view.
When you see a price spike like that, I can't help wondering, is it a short squeeze? Do you think that could be part of it?
It could be part of it. So far this year, we've seen historical levels of volatility in U.S. gas markets, particularly earlier in this year. And I think you're seeing that materialize right now with just how high prices have gone and the sharp correction today where we see gas prices falling by around 10% already. And so I think that is reflective of, the type of volatility, the type of, questions I think gas balances and traders are answering as they look at the sort of new global balance for gas markets, even though admittedly there are limits to how much global gas balances can affect U.S. gas prices.
I'm wondering, in the past, I seem to remember we've seen, it's a volatile commodity, of course. In the past, we've seen big investors get caught offside or big traders get offside. Are you hearing any scuttlebutt that some people may have been hurt badly by this run-up in gas?
Not specifically. I mean, with any type of move like this, I'm sure there are people who aren't weren't on the right side of this move. However, again, natural gas markets have been volatile. You mentioned that. As a commodity, it tends to be highly seasonal, highly volatile. And we're seeing that come through just in a more exaggerated manner. And maybe that's not a huge surprise. We've seen, this trend across markets more broadly, and not just in natural gas, not just in commodity markets broadly, but markets generally, given the types of risks that we're talking about in a macro sense that is affecting every asset. And natural gas is no exception.
I wonder, will this deter adoption of natural gas? Do you think some utilities will slow down their plans to move off coal?
I think gas has actually cemented its role, particularly during the transition alongside renewables. You've seen Europe create the task force with the United States that Biden announced for energy security. I think there's a growing realization both at home and abroad that natural gas is a bridge fuel. It's part of the solution. Are we going back to the Obama era, all of the above natural gas is championed environment? We'll see, probably not. But what I think is clear and clearer to the market and most market participants is that gas is part of that sort of bridge, medium-term to longer-term solution when it comes to the transition because of the role that it can play in backing out coal. I think right now we're clearly seeing stresses where people are asking a lot of big questions. But I think the answer at the end of the day is that natural gas is going to play a sustained role through the transition, both in power and in other forms of demand across the stack.
And Chris, I know we're kind of straying into politics here, but the big industrial users of natural gas in America have in the past, as recently as last fall, expressed concern that it could jack up the cost of this crucial fuel and feedstock for them. Huge exports from the US. Do you think Washington would ever clamp down on exports in order to keep natural gas prices down?
People have raised that question numerous times. I think what's happening right now, and to be clear, U.S. fundamentals are playing the key role in what's happening in U.S. gas prices right now against the backdrop of tight geopolitics and exports. There is a physical capacity limit on exports. We've seen U.S. LNG exports operate around 95% utilization year to date. And there's not, clearly based on that number, there's not a ton of runway left. So there is a cap on the impact. It takes years to build out new LNG export facilities. So it's nothing that's going to change overnight. I think right now we're in a stress balance, but I would attribute that more to domestic demand and the supply side playing a role against the sort of tense geopolitical backdrop. When we think about the longer term role, I think there's plenty of gas in the ground for industrial. It's creating the supply profile to support that in addition to exports.
Chris, thank you very much indeed.
Thank you so much.
Chris Louney, VP Global Commodity Strategy at RBC.